Okay, this is Brian Stoll for Timing Strategies, April the 10th, Thursday. Getting a little mishmash price action here. We are short from April the 7th, which was Monday, 25%. We didn't get any follow-through today. I was hoping to see a little more follow-through from yesterday's sell-off. This market is starting to look a little sick and scary like what I am beginning to see happened, and this is no prediction or anything like that, but what type of environment we had back in third, fourth week of July, first week of August. This would be our March 17th low, comparing that to the July 18th low of 2006. This would be the January 22nd, 23rd low of 2008, comparing that to the June 14th low of 2006. So somewhere past that second, third week of July is kind of looking like where we're at right now. Anything can happen. I don't make predictions. I just look for clues. If we can get back above that price threshold, which would be very similar to 128 on the spiders from 2006, now coming back to where we are in 2008 right now, if we can get back above that 137 price tag on a closing basis, maybe the 138.39 price tag, basically 138 to 139. It's very difficult. Nothing's perfect. That would give us a little more confidence that we're in more of that type of environment. We'd want to reverse that short, at least go flat, maybe get long a little bit. We'll see what kind of price action dictates. But again, we're still looking for that kill zone to get short really big at 142.5 all the way up to 151 on the spiders. We'll see what happens. Check out our article, Stock Market Choke Points. I'll give you a little more detail. I want to go into the XLE real brief. XLE, everybody loves oil. Well, take a look real quick of the low that we got from February the 7th of 2008 to the high of February the 28th. That's a 13-day cycle low to high. Now let's take that and bring that over from the low of March 20th to the highs that we just had yesterday of April the 9th, 2008, another 13-day cycle high. What's going to confirm that it's a 13-day cycle high? Well, we don't know. There's no confirmation except, in hindsight. But if we can get a close below that low of yesterday's bar of about $78 on a closing basis, or if we get an expansion excuse me, below today's low, that would give me a little more confidence to at least go flat or maybe take a small short position in the XLE. Interesting point on the 13-day rhythm. Also, if you look at the highs that we had back on January the 3rd of 2008 to the lows of January the 22nd, 2008, another 13-day cycle rhythm there. So that number's showing up quite a bit. So keep your eyes on that. Send us an email if you have any questions. XLF, it's a pigsty. You pump 100 billion, 500 billion, a trillion, $10 trillion. You just make the number up. The Fed's got it. Into the financial services sector in the banking system. Yeah, they're going to have a recovery. Sure, you give me 100 billion, $10 trillion. Just make up the number. I'll show you one hell of a party. And recovery, not even a thought. What's happening is the Merrill Lynch's, the Golden Rats, the Smith Barneys are basically giving the Fed and the Treasury, that's you and me, the taxpayer, all their dirty paper. Just basically a bag of pet rocks that nobody wants, and the Fed, Treasury is giving them back T-bills, basically our money, and saying, "Hey, everything's fixed." Well, everything's not fixed. You give me a sack of pet rocks, I'm going to look at you funny and just turn right around and walk away. But the banking system is special. They can't fail. They don't have to eat their own cooking. So enough of my rant. How to trade that? We may have put in a temporary low on the XLF. If we can get a price expansion above today's high, above $26 on the XLF, that would give temporary confirmation that we do have a short-term low put in. You can get long with a stop just below today's low at about 25.30, 25.35. But again, short-term, could be good for about 10, maybe even 15%, but that, again, hindsight remains to be seen. Last point I want to bring up is the SMH. Everybody's talking about the breakout. Well, it may be. I'd be a little more careful or hesitant, looking for maybe a bull trap. We may get that. It may be a bull trap already. If we trade below today's low, I'd start to smell something funny in the kitchen. Anything that trades below yesterday's low on the SMH, below 29.30, definitely something smells funny in the kitchen. It's probably because the kitchen's on fire. How's that going to translate to the Qs? Because the SMH and the QQQs kind of sister indexes, where the SMH is the ugly sister. SMH being the ugly sister, the Qs might be the better looking of the two sisters. How much more better looking, I don't know. But if we can trade back above 46 on the Qs tomorrow and get up to maybe 46.20, that would be a little more price confirmation that we're short-term bottoms. That should drag the rest of the market up. Again, the Qs, the NASDAQ, is showing a much better relative strength basis. Again, 46, 46.20. Anything above that $46 price tag, you have to give the benefit of the doubt to the short-term upside. Beyond that, we're still looking for the kill zone on the spiders, so that's going to translate to wherever that comes in on the Qs for the spiders at about 142.50, all the way up to 151 on the spiders. Last, but certainly not least, gold index, GLD. I'm just going to use the GDX. You know, kind of a rat's nest right now. We'll see what happens. The Fed and the Treasury hate gold. What's that mean for the GLD? Well, it's again kind of suspicious. I'd love to see this thing get down to 83.50 to be a little safer area to be a buyer. That would give us the two-leg completion, potential two-leg completion. That would bring us down to right about there at about 83.50. Right now we're at 91.77, so about 83.50 on the GLD. I'd be a much safer place for me to convince myself to be a buyer. Anything beyond that, please send us an email or give us a phone call. Hope this posts on YouTube. I wish you all the best, and have a good night.